All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cowguy. Thank you very much for being with us all day if you've been with us all day. And we'll reward you with 14 minutes, top of the hour, 1 Central, 2 Eastern. The Cowguy Close. We got a great show coming up. You want to see it. But let's take a look at these markets because this is going to be something you're really more concerned with right now. Let's take a look at corn, that corn table. How does that look? That's 9 cents lower. And July corn is 9 cents lower at 7.94 even. And all four, see, July, December, and March are all off 9 cents as well right now. So 7.93 3/4 is last in that July contract, 9 cents lower, and they're all 9 cents off right now. So in unison, that's actually that's bled a little lower, actually now 10 cents off. So it's kind of weakening as we get closer here towards the end of the day. Let's see what's going on in soybeans. They are weak as well. 13 cents lower now in that July contract to 16.32 1/4. Going out the deferreds doesn't get any better, really. We're only off 12 cents and it's 14.78 1/4. Let's see about wheat. How about Chicago wheat? What's going on there? 5 cents lower in that July contract to 10.50 1/4. But if you do go out to the deferreds, it's not as bad. 2 cents lower in that March contract to 10.58. If you go to the hard red wheat in Kansas City, what's that look like for us here, folks? That's 4 cents lower in the July contract. And if you go out to, say, March, we're only off 2 cents. But the July contract stands at 10.94 even, while March stands at $11 even and 3/4 of a penny. Just 2 cents lower. How about spring wheat, Minneapolis? 9 cents lower in that July contract to 11.58. There we go. That's interesting. 1 cent lower, though, out in March to 11.46 1/2. All right. And then lastly, see what we got going on in cotton. That's been all over the place. Up, down. Here we are. We're up now 54 points in that July contract to 151.35. And that gives me an opportunity to bring in our next guest analyst, Ted Seifried from Zaner Ag Hedge. He's in Chicago. All right, Ted, the floor is yours. Anything really come up and smack you in the face when it comes to these commodity prices?
Yeah, I mean, we certainly started off well today, Scott, but then we kind of gave that up shortly after the Ukrainian Minister of Agriculture said that they've got a pretty decent amount of corn planted. And, if you looked at what he was telling us, his expectations, it seems that they're going to get about 72%, between 70 and 75% of last year's corn crop planted this year. And the market, I think, had been factoring in something lower than that. And that kind of surprised some people. I don't know why, Scott. I mean, really, there's a lot of areas in Ukraine that aren't currently under fire. You knew that they were going to plant. Well, anyways, so that was the trigger, and that caused a bit of a reversal in these markets. In the meantime, you had a risk-off occurrence kind of happening with other commodities. Look at crude oil reversing lower as well. So all those things kind of combined have some lower trade here today. However, when you talk about the Ukraine, and let's say they do get 70 to 75% of that corn crop planted, it really makes you wonder what those yields are going to be. Are they really applying a whole lot of nitrogen, for example? I mean, that seems to be a very dangerous thing to be a nitrogen delivery guy in the Ukraine right now, or especially over the past couple of weeks. So, what if their yields are 20 to 30% off? Also, the ports, when are they going to be back up and running, even if this thing were to end today? You got to imagine that's going to linger quite some time. So, yes, okay, the market didn't like seeing that. They had factored in something smaller, like 20 or maybe 50 or 60% of that crop getting planted.
I think it was 50,
so, knee-jerk reaction lower. That being said, I mean, look at what's happening here. We can't get anything planted. We're way behind, and that is taking away the potential for increased corn acres, and it's really making that 181 national average yield seem like a really real long shot, Scott. So I don't know. We're focused on the Ukraine today, but at some point I feel like we should focus again on our situation. And even Brazil doesn't look all that great right now either.
All right. Everything looks a little wobbly. That's for sure. I really appreciate that stuff. All right. Take a second. Stay there. We're going to go away, pay some bills, and we'll come back and talk the livestock with Ted Seifried from Zaner Ag Hedge after these messages. All right. Welcome back to Market Day Report. I am the Cowguy. Scott Shellady wants to look at these live cattle markets. They've been quiet. Let's see what that live cattle board looks like. Still is pretty quiet. We got a 27-cent gain in June, now 30 cents in both June and August. 135.50 is last in June. You go out the deferreds, you actually tack on about 90 cents when we get out to Feb, but still a pretty quiet market there. How about the feeders? Well, we got a lower corn board. We should see something here, and it's a little bit better than we last looked at. August is done. Let's go. May's up 92 cents to 162.35, but that's not really what we're looking at here. We got an August market that's up $2.07 to 176.15. So that's some pretty good going when it comes to feeders. And then right behind it, SEP's up $1.65, so that's not too bad. Well, lean hogs have had their struggles today, and they continue to do so. June's off $2.87 to 102.10. That's 10 cents off the lows, ladies and gentlemen. And we've got, say, even October out there, and the deferred's off $2.10 to 89.22, and that is a tick off the lows there. So still kind of trading heavy when it comes to lean hogs. Let's bring in back in Ted Seifried. Ted, anything jump out at you here?
Well, you do like to see that the feeder cattle are finding some strength on down corn market. 2 days, well, so far this week, corn has been under a bit of pressure, and that has allowed feeders to, find some strength. And so that's good to see. And you like it when the feeders are the leaders. Sorry to be cliche, but, cattle trying to come along with it as well. And look, that cattle chart looks like we are kind of stuck in this range. We've got a lot of conflicting ideas about cattle right now. We want to be optimistic about grilling season and domestic demand, but at the same time, we watch that stock market kind of on some shaky ground right now. Crude oil still at higher prices. You wonder how spendy people are going to be for that grilling season. Are we going to be buying the choice cuts at the grocer or not? I think we will, Scott. I think we're going to surprise some of the demand doubters for the cattle. And ultimately, I think we will go higher in the cattle. But for right now, we're just kind of entrenched in the sideways range, and the stronger feeder cattle are helping us kind of stay up here. In the meantime, look at the hogs. Wow, what a precipitous slide we've seen here over the course of the last few trading sessions. But look at that very textbook head and shoulders topping formation in the hogs. A lot of this is technical because your bigger speculators that follow charts see that chart and want to step out of the way. Longer term, again, I do think our grilling season demand is going to surprise. I think ultimately we're going to find some footing here in the hogs at some point. I don't think we're there yet, but at some point, hogs are going to be a really nice buy.
Right.
But for the moment, we're still under that technical influence of that big topping pattern that you have on the chart.
Well, as long as the weather does get nice enough to start grilling it, and that's another question out there. So it's planting or grilling; they're both being delayed. All right, really appreciate that. That's Ted Seifried from Zaner Ag Hedge. He's in Chicago. We're going to bring it back here to Nashville so I can throw it over to Janet.